Well, I think we'll go ahead and get started. Thank you all for joining us this morning. I am Maggie Kulyk, CEO of Chicory Wealth, and I'm very excited today to have Ryan Lessard, who is the Manager of Business Development for Fidelity Digital Funds. I was going to say digital assets, but for Fidelity Digital Funds. He's joining us for this conversation this morning. We are recording this video. But we do want it to be as interactive as possible, because I'm assuming you're on this call because you either have confusion, strong opinions, or both about cryptocurrency. All of the above is fine. I'd ask you to drop your questions in the chat as we go along, and Liz is going to help me keep track of those. So please don't be shy. Ask your questions. I'm going to start today, like I always start these, with just a few brief comments about market conditions. If you do have questions for me about that, you can feel free to ask those as well. I would assume that most of you have noticed things have gotten a bit more volatile out there. Markets adjusting to the prediction now that the Fed is going to raise rates maybe as much as 4 times this year. As something like the market's pricing in something like an 88% probability of that. I will just say, as a consequence of that, we've seen some sell-off, particularly in the NASDAQ and in growth stocks. When I'm glancing at portfolios year to date, balanced portfolios, and what I mean by balanced, most of our portfolios, 50-50 portfolios, are down 2 or 3%. If you just isolate the stocks, they're down maybe 5%. The NASDAQ is in full, what they refer to now as correction territory, although I noticed we're trading up today, so we may be back out of it, but that's about a 10% decline. It's going to be volatile as things shake out. A couple of things to keep in mind. For those of you who have been following me on this webinar, I've been in the, we still have deflationary issues camp, and we're playing chicken with the Fed camp about how many interest rate increases the Fed will actually be successful in getting off before the market sells off so significantly that they back off. That's just my thesis. We're not betting the farm on that, but neither are we making dramatic changes to the portfolio in either direction. We just expect it to be volatile in the near term. Given that the market in the last few years has been up in double digits very significantly, that's kind of not surprising. We've been due for some volatility. And certainly if we are seeing a real regime change, as in interest rate moderation, and maybe the Fed reducing or rolling off, as they say, the treasuries they've been buying, and so tightening up the treasury market, we are going to see rates rise. We've seen the treasuries 10-year, I think, is trading today at like 1.8%, down slightly from where it was, but still up over where it has been. So we'll keep an eye on it, but I would expect it, you should expect your portfolios to continue, for things to continue to be a bit volatile. And it's not surprising. We'll just see where we're at by mid-year. There does seem to be slowing, though, in the rate of inflation and slowing in growth. So verdict's out. And unless you have specific questions of me on that, I'm going to move straight into today's conversation, which we decided to do because we are, unsurprisingly, getting more questions from our clients about so-called cryptocurrencies in general, Bitcoin specifically, and we're going to try and make this as some of you on the call may not be beginners to this at all. Some of you may have some knowledge of this. Some of you may be just like, I don't have a clue, what any of this is. So I want to start by, Ryan's going to give us a presentation, but, my question to you, Ryan, is, Bitcoin, for example, is it a currency? Is it a technology? Is it a floor shine? Is it a dessert topping? What is it really? What are we talking about when we're talking about cryptocurrencies? I'll let you take it from there. And do you have some slides you want to show us?
Yeah, I'll bring them up when they make sense, Maggie, over the course of the dialogue here. I think I'll more verbally answer your first question on obviously what is Bitcoin, right? Is we use this word cryptocurrency pretty loosely. There's multiple cryptocurrencies. When I say that, I mean hundreds and thousands of them, not just one, two, or three. And they don't all serve the same purpose or don't all try to do the same thing, much like other technologies in our life. And we'll focus a lot of our time on Bitcoin just because it was the first cryptocurrency. And I think for those folks trying to get their hands around understanding this topic, it makes sense to start there. And then you can apply a lot of the same concepts and terminology to other cryptocurrency assets. But thinking about that generally, Maggie, I always frame the conversation of trying to think about the world we live in over the last 10 to 20 years and how that's changed so dramatically because of technology in more or less all facets of our lives, right? The way we use our phones, interact with everything from the second we wake up in the morning to the alarm ringing on our iPhone to when we go to bed at night and someone's maybe got the Apple Watch on, putting that on the charger, or you have an app maybe that turns off the lights in your home or something crazy like that, right? Everything we do, we take for granted is pretty technologically advanced at this point, but that's our life as we know it now. And the reason I bring this up is for the most part, financial services, currency and things of that nature haven't really adapted with technology for the most part over the last 10 20 plus years. They've lagged behind all these other parts of our lives where yes, nowadays we can do things like use Venmo and PayPal and these other applications that are built on top of the financial system. But we talk about Bitcoin today and compare and contrast that to the traditional financial system. The underlying piping and plumbing of how the money moves in the economy hasn't really changed at all in 20, 30 years. We just were able to build some software on top of it to make it feel quicker and more sleek. But at the end of the day, the way money settles with the Fed and the banks in the world still is very slow and archaic. So that gives us a chance, I think, to have this conversation today about Bitcoin and other digital assets and how that's transforming this world as we know it. The only thing I ask of everyone on this call, we're obviously going to have some Q&A, at the conclusion here and answer any and all of your questions that things you previously heard or know about this topic, and clarify any points there. I just ask folks keep an open mind. I know it's a very polarizing topic sometimes, and we've heard, hey, is this used for illicit activity, or maybe it uses a lot of energy, or these other, topical items. Put that aside just for 20 minutes while I talk and try to understand the fundamentals, and then we'll come back, of course, and address all of those very relevant topics and things that correlate with Bitcoin or other digital assets. So why don't I start today by just going over what is Bitcoin, right? I'm sure many of you might know what it is, have read a little bit about it, or maybe even in theory, some people on this call own some Bitcoin or other digital assets. But I don't want to take that for granted that many folks also might not be very familiar with it and maybe just really want to understand what it is and what it isn't. Now, if you think about to when Bitcoin was founded as a reference in time, the idea of Bitcoin was published in a white paper that was posted online that was published on Halloween of 2008. And then the Bitcoin network actually went live in January of 2009. So this has been operating uninterrupted for the better part of 13 years now. And a lot has changed on what Bitcoin was used for in 2009 and maybe the legitimacy of it in 2022. But Bitcoin was created by a pseudonymous founder, Satoshi Nakamoto. Now, who Satoshi is, whether it's one individual or multiple people, is still unknown to this day. And actually is somewhat nice in terms of what Bitcoin is meant to be, that there's really no true founder that we have to go back to for confirmation and have to ask questions of, right? And someone that controls the network. Because what Bitcoin set out to do and what Bitcoin is set out to be is this digital, decentralized, peer-to-peer cash transfer of value system. So breaking that down in more simple terms, we remove the need for banks or those central intermediaries, right? Folks that help us move money. And rather than do that, we transfer things just from person to person. Rather than, I need to transfer Maggie $50 and we contract some bank to send the wire from my account to Maggie's, I send this money, i.e. Bitcoin, directly to Maggie. You remove the middleman, you remove the intermediary and create a network that rather than run on the trust of the bank or run on the trust of, again, the central authority, runs on computer code. It runs on software itself. So I think we're going from putting trust in financial institutions to putting trust in the technology, in the computer code to help transfer this Bitcoin or this money. So that's an important concept. Fundamentally what it does and it's meant to do. I think the timing of when Bitcoin came into this world is very important as well. We think about 2008, 2009 and what was going on in our lives then, specifically financial lives, right? The global financial crisis. And a lot of people started to lose some trust in institutions back then, that they were manipulating these funky securities and doing, things behind the scenes that wasn't in the right faith of the general public. And the government kind of let them off the hook for doing just that. So that's not to say we stopped using banks, right? We continue to use banks for 10 plus years after that. They serve a great purpose. But there was, I think, a need in starting a growing interest for a way to do things without always relying on that other party.
Right.
So that's the
things. Can I ask you? Can I just jump in and say that
absolutely.
So what I'm hearing you say that first and foremost, Bitcoin and maybe other cryptocurrencies, I don't know, we can bracket that for a moment, is first and foremost trying to find a way to establish trust between two parties that disaggregates or disintermediates a third party to validate that trust. Theoretically, right? That's what it's attempting to do. So unlike, like when I transfer Venmo money, I'm still going through a bank. It seems like I'm transferring it direct to a person, but it's having to route through a banking institution. Is this right?
That's correct, right? If you go on your Venmo, right, they'll even say, if you're trying to take the money out of your Venmo back into your bank account, they give you two options. You can do it more instantly and pay a fee to prioritize it, or it'll take 1 to 3 business days to reflect in your bank account, because that's traditionally how slow money moves on the back end to actually go to the bank. It can show and reflect these fake balances in your account. And not to say there's anything wrong with what's going on with Venmo. This is all above board and real what's going on. But the actual money movement behind the scenes to settle and clear are two common terms in the banking world. The final settlement of the money takes days, not hours. And that's the large difference here, using Bitcoin as an example, and we'll get into this a bit. But transactions on the Bitcoin network settle in as little as 10 minutes. And that's borderless, that's across the globe. It doesn't matter if I'm sending the money somewhere else down the street or if I'm sending it across the world to a different continent. So it's really borderless, it's permissionless. We're not asking someone if we can do this. We're not paying Western Union a hefty fee and agreeing to their 3 to 5 business days to get this money to Europe. We're doing this on our own accord, really in a more, I guess you could say, expected timeline. Now, with that in mind, there's 2 items I do want to differentiate here as we think about Bitcoin, again, as our example. There's what is known as Bitcoin, the asset, right? It's the thing you own. It's the thing you send. It's different than what we're used to because it's intangible. We can't physically go out like cash and get a hold of it and put it under our mattress or something. We can never actually touch it because it's all digital. But Bitcoin is the asset itself, right? It's what you would own and store digitally somewhere that you paid your dollars for, in theory, right? And then we have what's known as the Bitcoin blockchain, in the topic of blockchain, which I do want to separately discuss. So if you want to think about blockchains, really just think about the concept of a digital ledger system, just a record-keeping system that's a new way of doing things to store information. So in the case of Bitcoin, right, we're storing the transactions that are occurring on the Bitcoin network. So we have a record of all those transactions that are occurring. And in the case of Bitcoin, that's publicly viewable. So you could go back and see transactions that anyone made as soon as 10 minutes ago. But also you could go back to 2009 when the Bitcoin network launched and look at the first transactions that happened on the network. So it's publicly sourced, chronological order, because it's decentralized. Again, there's not a bank record keeping this. It's computers all around the world independently upholding the network.
And importantly, you can see the movement, but you can't see who the movement was to. Is that correct? It's anonymous.
Exactly. So it's not going to say Ryan Lessard sent $10 worth of Bitcoin. There's going to be a long string of letters and numbers that might correlate. It might be me. No one would, in theory, know that by looking at it, but they're going to see that long string of numbers and letters that might be associated with my account at Coinbase or another exchange that you might be doing this on. So that's a good point, Maggie. But I think, again, lastly, on the blockchain side, blockchains aren't just unique to Bitcoin, right? Bitcoin has its own blockchain. Other cryptocurrencies uniquely have their separate and proprietary blockchains for their cryptocurrency or digital asset, if that's an easier term to use, because they're not all trying to be currencies, and we can get into that. And then lastly, there's other uses of blockchain outside of cryptocurrency and digital assets, right? There's what people would refer to as enterprise blockchains. So a hospital might have a blockchain to record keep their patient data and information as their just way of keeping those records in a digital form. So it's not always specific to Bitcoin.
And let me ask you a question on that, Ryan, and I don't mean to get you in the weeds, but I think it's important. I'm just clarity here. So let's say a hospital has a blockchain. That's what's unique about a blockchain. Is it correct to say that it's a whole network of independent computers? Like, it's a particular way to do that database. It isn't just any old database, right? It's not like, we use Wealthbox to keep track of our client information. That's not a blockchain. That's just a database. Is that right?
Exactly. That's very correct. It's just another type of database, a new iteration of that. Not every business needs to use a blockchain, right? There's other use cases where different types of databases are more efficient than a blockchain, depending on what type of business you're running, right? Because there's associated costs with running a blockchain. And to be quite frank, right, the whole point we're talking about here is Bitcoin is decentralized. So it makes sense to have all these computers all around the world running this network together. But if you're a hospital, it's just private. You don't even need a blockchain necessarily. It's your own servers that you're using. It's not something any of us on this call could look into just because it's a blockchain, right? It's all internal on their system. So it's a good distinction.
Got it.
Now, what else I think about here, in terms of what Bitcoin really is and how we compare it, Maggie, you mentioned the concept at the start of money, or right, what is the point of owning these things? I think it's important to really break down that word cryptocurrency, which everything gets umbrellaed under, but they're not really all currencies, especially current day today. And important to distinguish maybe, obviously, what's Bitcoin may be looked at and used for, and then obviously in theory, what are these other assets used for potentially as well? And we don't have to get specific, but we can talk general categories in terms of what they're trying to accomplish. When I think about the money question, I usually even like to back up a really quick layer of what is money, like at the end of the day, in a really simple form. And money is usually three things, or has been defined to be three things. It's a unit of account, medium of exchange, and a store of value. So if we specifically talk about all three of those real quick, a unit of account is just how we price goods and services, right? We want to make sure we can efficiently say this Snickers bar is worth a lot less than that TV that you went out and just purchased, right? We need a way of distinguishing those values. If you rewind history hundreds of years, you showed up at a market somewhere to barter, and you showed up with a single piece of gold, and it didn't matter if you were buying 10 chickens or one chicken, you only had the single piece of gold, right? You could only give them one single thing. So fiat currency, which is just another word for kind of the US dollar or money as we know it, has done a pretty good job of being a unit of account, right? We have decimal places, we have hundreds, thousands, millions, pretty good distinction on how we price things efficiently and differentiate the value of goods and services. Now, when you think about medium of exchange, that's just how easily or willingly someone else will accept what you're trying to give them, i.e. in this case, money. If any of us here try to go to dinner tonight and we sit down at the restaurant and the bill comes, we could put our US dollars in there. The waiter or waitress is going to take that. They're going to ring us up and not ask any questions, right? The US dollar is an accepted medium of exchange, both here in the US, but around the globe, honestly, for the most part too. Right. And then, so there's no two issues there. Obviously, the US dollar, for the most part, does a really great job of accomplishing both those things. The last point of a store of value is the concept of your paycheck comes weekly or bi-weekly. You put that in your bank account. You want some expectation that a month from now, that $1,000 is still worth $1,000, right? It can still buy the same amount of things for $1,000 that it did last month. And that brings the concept of inflation, right? And how that's been very top of mind. I'm sure, Maggie, you talk to, the clients about this pretty regularly, but the concept of inflation and, low interest rates and how that's been happening both here in the US currently and recently, but also around the globe is, it's been happening not recently only around the globe, but, a lot of folks in countries outside of these borders have been a lot worse off in terms of their inflation rates over time. And obviously we're US citizens, so we think about ourselves first and foremost, but we're 350 million people of 7.5 billion in this world. And there's an appetite for some sort of asset or some sort of currency that is a store of value and doesn't more so easily lose its value overnight, right? You don't want to live in a country where your paycheck comes and it could have bought the groceries last week, but this week groceries went up 2 times and now you can't afford the same things that you expected to buy. And the reason for all that and the concept of inflation, as I'm sure Maggie and team tells you, is just there's more dollars available in the world. So if the governments can keep, central banks keep printing money, it's worth in theory a little less over time. That brings us into a very important characteristic of Bitcoin, in that there will only ever be 21 million Bitcoin. So that's very specific and different from, the US dollar or other currencies as we know it. And that's why most investors would categorize Bitcoin as this aspiring store of value, where we have this known hard cap supply of 21 million. You can't print any more to really inflate it away. In the amount of Bitcoin in this world currently, or something roughly like 19 million, in the remaining 2 million are coming freshly into existence, being created on a known supply schedule. So we know when they're coming, we know when they're getting created. And so it's predictable to us as investors knowing what that issuance rate or inflation rate is. So I think that's a really important distinction. Investors have been viewing Bitcoin as aspiring store of value, similar to a digital gold, right? Gold is this scarce metal, or you could say art or real estate holds value well because it's scarce for the most part. And then Bitcoin is trying to improve on some of these properties that you see on the screen, or what are stores of value, right? They're scarce. In the case of Bitcoin, I just mentioned 21 million. There's scarce real estate like Miami Beach front coastline. You can't build any more of that, so people pay a premium.
In fact, it's going away as we speak with the climate change, but that's
that too. Eventually, it'll be even more scarce as it goes underwater by the year until it's gone over time. But you have other things like portability, right? I mentioned no one controls the Bitcoin network. I don't have to ask permission to send my Bitcoin to Maggie or anyone else for that matter. So it's extremely portable and settles very quickly, thinking about settlement speed in as little as 10 minutes. It's verifiable because that blockchain is public and you can go on there and see the record of transactions as it moves from one person to another. And then it's very divisible. I didn't really touch on this much, but a question I get asked quite often is, Ryan, Bitcoin today may be trading at $42,000 a Bitcoin. I can't afford that. I don't want to buy a full Bitcoin. What do I do here, right? What are my options? Bitcoin is, like a US dollar, very divisible, if you will. So you don't have to buy a full Bitcoin. Folks aren't transacting with a full Bitcoin every time they're moving money. It's divisible up to 8 decimal places. So in theory, even much more divisible than the US dollar itself, which allows it to be functionally serviceable for pricing things and thinking about a unit of account. And then over time, Bitcoin probably aspires to be a better medium of exchange. And I'll stop sharing this screen and then pull up another slide just to make a point there, Maggie, and then I'll pause for a minute. But I'm thinking about, right, how many people are using Bitcoin current day, or, what are the expectations of that, right? We hear about it a lot, but are people actually using it for any good purpose, like transferring money on the network? What you can see here is that Bitcoin, subscriber addresses are growing. This number is a little behind even, but what I can tell you is about 150 million people worldwide interact with Bitcoin in some shape or form current day. Again, that's out of the 7 to 8 billion people in this world. I don't know that we'll ever have all 8 billion people interacting with Bitcoin or anything else for that matter, right? It's just not how things work. Not every person in the world ends up using everything, even cell phones, as the example shown here. But what we kind of expect here at Fidelity is it's not unrealistic for the number of people using Bitcoin to be 1 billion people within 5 years, right? So we're thinking about similar growth curves to how people adopted things like mobile phones, which is on the graph that I'm showing on the screen here. And those things have network effects, which is the point I'm trying to make, right? So if I'm the only person on this call with a cell phone and I want to send all of you, text you all a picture, it doesn't really do me any good to have this cell phone if no one else has their own cell phone to receive that picture on. Same thing goes for, say, a Facebook or a social network, where if you're the first person on, it's really not that useful because there's no one else to share your photos with or message. But as more people adopt that over time, similar to Bitcoin, it becomes exponentially more useful. As say Maggie's the only other person on this call right now that might accept my Bitcoin. It's okay. It has some use maybe, but I better hope I need to transact with Maggie, obviously, of course. But if we have this call in 6 months and now 10 people on this call are using Bitcoin and want to, transact with that, becomes a lot more useful to me as a way to exchange and, transfer value. So I'll pause, Maggie. I know I've covered a lot there. I don't know if there's anything on your mind.
Yeah, I mean, so I guess there, yeah, you have covered a lot, and there's a lot on my mind and perhaps on other people's minds. So let's start. I'm going to start at network effects, which is what you're describing, and work back. And we can talk for a minute of why, Fidelity seems to me, correct me if I'm wrong, but I don't know of any other platform, other custodian, I guess is the better word, that has invested as much and sort of taken this whole thing as seriously. We can talk about that in a moment, but it is the theory that network effects, in other words, the more people are using Bitcoin to transact, the more valuable the Bitcoin becomes. Is that the idea? In other words, it's not, I mean, I know you can take it out to 8 decimal points, right? But and as a consequence of knowing exactly how much there's going to be and the ability to take it out to 8 decimal points, is there a way to correlate that with its potential value as users increase? Do you understand my question?
Absolutely. And it's a common one we get all the time, right? What is the fair value for a Bitcoin? What should Bitcoin be worth at any given time, right?
Right.
It's worth $42,000 today. Is it overvalued? Is it undervalued? Right. Hard to say on any given moment of time. But the point you make is important, where if we think about traditional investing in companies, stocks, or equities, we value those things based on, all right, how much money are they making, right? How much revenue are they making? What is their profit and earnings, right? And we can kind of get a better understanding of how that compares and contrasts versus their peer companies and have a relative sense if they're valued, overvalued or undervalued. Now, in the case of Bitcoin, there are no earnings, right? There's no revenue because it's not a central company. There's no one, we're not paying anybody to do this or, run the network. It's decentralized intentionally. And, folks are running computers around the globe, but they're not in charge of Bitcoin per se by any means. So the price function ultimately is a function of supply and demand, right? If we see demand increasing over time, and we have this known supply of how much Bitcoin there is, well, in theory, in that case, the price is going to go up, because if I have my Bitcoin and I don't want to sell it currently right now, and you need to buy some, Maggie, you have to kind of look elsewhere and try to find some in the market. And if there's only so much available for purchase, you and others who want to acquire some are going to be willing to pay a premium more and more for that Bitcoin because you see the value in it growing over time. So it's the same concept. It sounds a little funny at first from a speculative sense that you're just buying it because I'm buying it because someone else is buying it. And I acknowledge that fact as well. But I think what's important to remember how we got here and started this call of the technological advances that are being empowered here in terms of why someone would even want to use this, right? How fast transactions can settle, how borderless it is and permissionless to send this between you and somebody else. And we can get into the more specific use cases of this as well. But the point, to answer your question, Maggie, I think is price is this function of supply and demand, where supply is known, both current supply and new supply, and when that's coming into existence. And then we have an estimation of the demand curve over time based on network effects.
And so I'll get to your question in just a second, sort of the logistics there, Liz. But before I do, so you were talking about what was it, 21, did you say 21 million Bitcoin
Correct.
left to be released? Because we're an environmental, social, and governance firm. Mm-hmm. We're very concerned about carbon footprint. Lots of press around what the energy requirements are to mine. So let me start with a basic question. Once we get to 21 million, is the mining over?
It's a great question. So mining, just for everyone to level set, the word mining is confusing because we think hard hats and picks and shovels, right?
Right.
We're getting in there and digging up coal or something.
Yes. Yeah, it's terrible.
The word mining, as it relates to Bitcoin, is the process of verifying transactions on the network. It's really that simple. The miners aren't even people per se, they're computers that obviously some person set up at some point in time, right? They turned it on and plugged it in and obviously purchased the device or the hardware. but the miners are computers, solving equations to verify the transactions that are occurring on the network. When I'm sending Maggie $10 of Bitcoin, that's getting sent out, packaged up with other transactions from people all around the world and getting verified by the miners, the computers, and added to the blockchain, the record of completed transactions, right? So I oversimplified that a bit, but I think it's important. That's just the concept there of what a miner is. Now you bring up the point, right? Okay, so there's only ever going to be 21 million Bitcoin that ever exist. 19 million of those 21 million Bitcoin exist currently today. Now, if we think about that, that roughly obviously leaves us with about 2 million Bitcoin to come into existence, from here on out. Well, we have a known supply schedule or issuance rate that I'll show on the left-hand side here of the screen of how many of those are coming into market. So you see this is historic, obviously, where the supply curve was and where we are current day, but the issuance rate's getting cut in half every 4 years. So that's important to note. We know exactly how many Bitcoin are getting created every 10 minutes. So about current day, 6.25 Bitcoin get created every 10 minutes, about 900 Bitcoin a day. And then again, gets cut in half every 4 years. So the last Bitcoin to ever be mined, Maggie, will happen in the year 2140, not for another 120 years, right? So unfortunately for most of us on this call, right, unless we're cryogenically frozen, we aren't going to be here to see the end of that.
Yeah.
Right. So fortunately or unfortunately,
Right.
but it's an important point because your overall question is, I don't know if we want to go into this now, but around ESG and the environmental impact of mining. So I'll leave it up to you if we want to save that to another point. We can obviously dig in a bit on the overall topic.
Well, I mean, I think we should talk about that some. I mean, Liz also points out in the chat that there's a growing awareness in rural areas where some of these miners, I gather they're miners that are setting up. There's noise pollution, there's issues associated therewith. I mean, how does Fidelity view this? I think you're not completely inured to these issues. So what are the thoughts on how this might not improve, etc. over time?
So I think what's important to recognize, and I'll break down some of the brass tacks, maybe just because they're interesting to folks, and like, what does this even look like, right? Am I mining Bitcoin just on my laptop right here? Like it's just a regular old computer or something that you turn on? You're using specialized computers. You can't just use your regular old laptop to, support this system. These are systems that are hardware devices, maybe the size of a loaf of bread or bigger. They're very specialized. There's no other purpose for these devices than really mining Bitcoin. They're called ASICs, A-S-I-C, application specific integrated circuits. So again, this is some minutia, but the point of me saying this is they're very small and portable. And the good news is there, right? Bitcoin isn't going to a source like you do with oil, right? With oil or something else, you need to go find the resource and pull it out of wherever it is. So you're kind of beholden to where the oil or the coal or the metal is located, and you're just going there. Bitcoin just needs energy, right? The Bitcoin miners, the machines, they just need energy to get turned on. It can be any type of energy. It can be dirty coal energy in theory, obviously, right? That's what a lot of our world, unfortunately, is still using. We're trying to get away from that, generally speaking, Bitcoin or otherwise. And then there's renewable energy that, unfortunately, the reason it hasn't totally, permeated our world is sometimes, right, it's hard to use solar energy or other things if you're not close to the source of that energy. It's hard to transport wind energy very far, just generally speaking. But Bitcoin can seek that out where we, instead of trying to bring the energy to us, you go where the energy is. So what we're seeing is, all right, you have a waterfall and a hydro dam somewhere in upstate New York. Well, that hasn't been used in 10 years because no one really lives around there and there's not use for it since older days. Why don't we just bring all these computers to the dam and set up next to the dam and harness that renewable energy for the sake of turning on these computers? So obviously it's still early days. Bitcoin as a whole, miners and the community of miners that do this are encouraged and willing to seek out renewable energy and are incentivized to do so. Renewable energy is cheaper than dirty energy to begin with. So they want to make more money doing this network, right? They're running their mining equipment. It behooves them to go out and seek the lowest cost energy that they can find. So we'll see more low cost energy over time in the Bitcoin network. The other part of Liz's question around the noise pollution, I think is a different topic to cover, but I think what you'll find over time is that it's going to be in the best interest of these companies or whoever's doing this to not disrupt the city or population or run into more governance trouble by doing things like this. Seek out areas that aren't as populated.
So, okay, so that's helpful. Let me go back to a few of the questions that came in. So Denise says, so it's scarce like art, where the market demand could go up and down, but the new factor, and that this is important, is the network effect makes the value more intriguing, stable, hard to know stable, but clearly it's a supply demand. The more people who need it, the more valuable to transact, because they choose to begin to transact with it, the more theoretically valuable a single coin becomes.
Yeah,
Right?
and I think Denise hits the nail on the head with, as the network effects grow, it becomes more stable. And I would say that from the lens of volatility, right? I think it's important to acknowledge that Bitcoin and other cryptocurrencies are very volatile current day, especially compared to other assets that someone might own in their portfolio. And the reason for that, primarily, right, is because they are so new in their adoption curve or their adoption cycle, where they're very, again, fragile to news that occurs, and, people that are speculating more so and not always holding the asset for the right reasons and not using it for the ways that folks would like to see it be used for. Some people buy Bitcoin because they actually do transact in it, right, and send it otherwise. Other people just buy it because someone told them to, right? They might sell it on a whim as well. And that's fine. I'm not here to tell people what they can or can't do, as much as I'm saying, as more people adopt the network, the expectation, like anything else, is that those assets end up being less volatile as they are adopted, and there's more holders of that, right? It's more diversified, rather than so concentrated maybe with certain people.
So we have I'm going to stick with the mining questions just for a minute until we run to the bottom of those. So someone asked, so mining doesn't mean finding it. It's as you pointed out, it's about the ledger. So that's going to continue on. And in fact, as it expands more, that mining would theoretically expand as well, because you need to be able to validate transactions on the ledger. Am I tracking right on that?
Absolutely.
And so then the question is like, well, how do you get into the mining business, essentially? And how do these guys or gals or whoever get paid? Because they're probably not setting up these data centers for free. And who's behind that? Where's the money coming from that? Do we own companies already that are involved in data mining?
Yeah.
I mean, so tell us more about that, if you would.
Absolutely. So, right, who is mining Bitcoin? You can't necessarily figure that out on your own outside of what's public information, right? In theory, Ryan Lessard could have paid to buy one of these specialized hardware devices to mine Bitcoin, and I could be doing it off screen in the corner of my room right here, none the wiser to anyone on this call or anyone else in the world, right? But a lot of the time, like anything else, it's economies of scale. There's a lot more commercial efforts that end up happening here, where people see an opportunity to profit and make money. And I'll get into that in a second, how they make money and obviously why they might do this and incentivized to do this. And someone, whether it's a couple friends, decide maybe we go on a small little effort by ourselves and buy some of these devices to do this. And then you see how that scales to, why don't we open up a small little business that does this, right, locally here? And then why don't we run a really big business that goes public and does this at scale, right? So you start to see how that grows over time in terms of people doing this at scale, because it makes more sense from sourcing money to finance their business to get off the ground. It's not cheap. One of those devices I mentioned, the size of a loaf of bread, a single Bitcoin mining hardware device, cost about $10,000. It went up significantly in price the last year with the same challenges most tech did, which is lack of semiconductors and supply chain issues around the world. Same thing, any computer, any technology is facing those same challenges right now. But where I'm going with this here, maybe back to how do they make money, is I mentioned that whole process of how do you verify transactions, right? The miners are verifying the transactions and adding those transactions to the blockchain. Really what's unique and I would say cool about Bitcoin, that same process of them verifying transactions is the way that you issue or create new Bitcoin. So those way the new Bitcoin get issued into the world, created, is the miner that solved that problem to verify the transactions. It's a single person every time, or a single computer. They compete to do it, and someone wins every 10 minutes, give or take.
And they get rewarded Bitcoin.
They get rewarded in Bitcoin.
And the Bitcoin is created.
Exactly. Those are new Bitcoin freshly created. So that issuance of new Bitcoin is given to the miner that solved the transactions. So you think about that current day and some numbers I mentioned earlier to rehash. Current day, every 10 minutes, which is the period in which they add transactions every 10 minutes to the blockchain, a miner is getting issued 6.25 Bitcoin for their efforts. US dollar terms, current Bitcoin price, that's give or take $250,000, $300,000 USD. So that's a pretty penny, and you could maybe see why someone would be incentivized to run some computers doing this, right? They figure out their costs, but if that's their top line, revenue, starts to make sense, right? There's thousands of people doing this, so it's not like they're the ones that get $250,000, $300,000 every 10 minutes. Maybe they win once a day, maybe less, but over time, the profit model obviously works where they want to continue to do this over time. So they're incentivized to support the network and verify transactions because they're given the new Bitcoin for doing so.
So importantly, the people who are transacting, unlike in our current situation where we're moving money, and somebody gets paid, the old saying, anytime money moves, somebody gets paid. So in our current situation, money moves and intermediaries get paid on the movement, and it comes from the money moving. In this instance, the miners are rewarded the currency itself, but there's no slippage in the transaction. So if I were to send you one Bitcoin, like that's not going to happen. I mean, I really appreciate this talk, but we're not going to send you one Bitcoin. But if theoretically I was going to send you one Bitcoin, you would get all of that Bitcoin and I would transact all of that Bitcoin, and there wouldn't be a reduction, a fee as a consequence of that transaction to me. Correct. Or you.
Yeah, the current economics of the Bitcoin system is that there's no need, because the miner who's verifying that transaction, they're getting paid in these freshly created Bitcoins irrelevant to the one you and I sent each other, right? They don't need any part of what we transacted in because they're getting the new ones. They have a smile on their face that they're $250,000, right? They don't need any.
They need to go make it into dollars before it becomes half of that.
Yeah, exactly.
There's that. We'll talk about that in a minute, but right.
Longer term vision, Maggie, brings up an important point. I mean, again, it's hard for some of us to care too much about or conceptualize, as I mentioned, because this is going to happen for the next 120 years. It's hard for us to be like, oh, well, I really need to know in 120 years how it's going to work once all the Bitcoins are mined. But just for the sake of knowing, it would transact at that or transform at that point to a fee-based model. So in that time frame, there would be no new Bitcoin to give this miner. So they're not going to do it for free at this point. So there would then be fees associated with transacting on the network. So long-term problem, but a solution is in the code.
So so that's a good segue to George's question. Why was the figure of 21 million chosen? And I'm pretty sure the answer is who the hell knows. And could it ever be expanded? And I'll let you answer that. But my sense from what you said is the answer is it's a computer code, and the answer is no.
Yeah, it's completely arbitrary. The 21 million, it's one of the great questions of Bitcoin. And because the anonymous founder is still unknown to this day, whether they're alive or deceased, we don't even know. We can't ask them, unfortunately, but the number was extremely arbitrary in 21 million. So that unfortunately is not an amazing answer there. The second part about could it be expanded, right? I think an important way to think about Bitcoin, which makes it really unique, is, again, it's decentralized, right? So no one's in charge of, hey, I'm changing the direction of this technology today, right? It has to be a decided and decisive effort by, say, 90% of the network to make any changes to the computer code. People can propose things, not usually related to how many Bitcoin there are going to be, but do we want to make the Bitcoin blocks a little bigger so we can include more transactions every 10 minutes, right? Things of that nature that are more structurally sound of how we want to, make the network run. That happens over time, not very often, but they're far and few between changes that have happened to the network. The reality is no one would ever be incentivized to allow for more Bitcoin to be created, right? If you're part of this network, why would you ever agree to such thing? That would, again, the whole point and principle of Bitcoin is we can't print more to deflate our own value. So there's no incentive for anyone to agree to double the supply and essentially cut their value in half, in theory, overnight by doing that. So that's kind of the game theory there of no one would want or need to do such a thing.
So Okay, so I've got a lot of questions and more questions coming in. And I think, I don't know about y'all, I find this kind of curious and interesting. And part of why I find it interesting is because it helps us take a 30,000-foot view of what our own existing monetary system is. It's not just like, is Bitcoin a good or bad thing? It's like, when you start to contemplate philosophically what Bitcoin is, it gives you a way in to contemplate what how our existing monetary system really works, what the plumbing looks like. But let me turn to Liz's question. You've mentioned that crypto is an imaginary asset that has no value on its own. I would argue that is the same as the US dollar. It's based on the idea that someone else will always come along and pay you more than you spent. You can answer this. What happens when crypto holders decide for societal reasons or whatever to cash out and the price plummets? Is when all these bubbles burst. Won't it be the wealthy who are left basically intact and smaller investors will be wiped out?
Yeah, it's a packed question. And again, I think it gets back to, there's a lot of things happening overall in cryptocurrency, right? A lot of different coins or tokens, what have you. Much of that, I think we could probably all agree, is very speculative. And if you were to try to even evaluate what they were doing, you probably couldn't figure out what they were trying to create, or they don't even know what they're trying to create, other than potentially a cash grab or really, raising assets with no plan in place. So there's a lot of other things being built in the world of digital assets that is legitimate outside of Bitcoin as well. We haven't talked about it much, but there are other things. Then there's the whole world of speculation that really doesn't even try to necessarily solve a purpose. If you want to talk specific examples, say like Dogecoin or things of that nature that are more like this meme coin thing, similar to how we saw last year in equities, the GameStops of the world, the AMCs of the world, things of crazy online drama trading, just purely on the sake of bidding things up because we can, right? So there's plenty of speculation, generally speaking, in the asset class. I think that's important to acknowledge, and why investors should be, of course, careful if they're doing things outside of the realm of what they personally know or can trust. Now, as it relates to like applying that concept to Bitcoin, right? I think we've covered a number of things on this call that kind of give Bitcoin fundamental value, not in the same way that it generates cash flows, but an improvement in technology to why someone would want to use this system relative to the legacy system as we know it, right? The US dollar, or another currency by a different country in this world, in theory also has only value because the government says it does, right? And what we've seen in less developed nations than the US, fortunately don't have to worry about this much here, but corruption runs amok in many countries around this world, where we're talking about here in terms of people kind of selling out and cashing out actually happens with fiat currency around the world, where the government more or less puts our hands up, we don't really know what to do anymore, we can't control this like we thought we could, and the price plummets, or the value of your asset plummets overnight. So in theory, this could happen to any single thing in this world. I think, again, what we see is, are people developing and using this network for the right reasons? Is anything being accomplished with the technology, right? And I could argue that there is. I'd say we haven't talked about it much, but again, we're pretty well off here in the US in terms of our government and lack of corruption. But a good example are places that are unbanked. Depends who you ask, all relative, right? Yeah, or what we're talking about specifically.
Yeah, right.
Relative terms, at least. An example is El Salvador, a Central American country here, in just the fall of last year, adopted Bitcoin as legal tender alongside the US dollar. So now they have two forms of legal tender, Bitcoin and the US dollar. Now, that's really interesting, right? Conceptually. And one of the reasons they did this wasn't necessarily because they viewed Bitcoin so superior to the US dollar, because they kept the US dollar as well, right? What the problem is in that country is the country is primarily unbanked. They don't have resources to be set up traditionally to bank accounts like we do here in the US. And for that reason, it's very hard for their citizens to transfer value or store their value in an efficient way. So what they did was they allowed their citizens to all download this app that they partnered with on their cell phones for Bitcoin transactions. And they gifted every citizen who did so $30 worth of Bitcoin just to incentivize the adoption. Now, they've already outran the pace of people that are using Bitcoin in the country relative to traditional banks in a matter of 4 to 6 months. And that's because all these people need are an app on a cell phone to hold and transact in Bitcoin. They don't need a bank. They don't need a normal financial institution. They just need a front-end software that's more commonly in the world of Bitcoin, right? I mentioned earlier, you can't hold it physically, you don't touch it, but it still has to be stored somewhere. It gets stored in what's called a wallet, which is just, a way of storing these digital things on your phone or online. It gets stored in this Bitcoin wallet on an app on their phone, and it gives them essentially a bank that transacts in Bitcoin, is domiciled in Bitcoin. So I know I got in a bit of a tangent there, but we're seeing these real world applications of how, from a societal perspective, we talk about ESG too, Maggie, and you mentioned this, obviously a lot of concerns on the E side, especially right now. Societal perspective from Bitcoin, we haven't talked about, say, the illicit things going on, but we're seeing real world use cases of how it can improve lives of these, underdeveloped nations, at least improving their economical flow of money movement.
Well, and it raises a lot of interesting questions that are beyond the scope of this conversation related to the US dollar and its status as the reserve currency and how Bitcoin may or may not threaten that. It raises the question of the way in which digital assets in general and the idea of the digital dollar is being pushed forward by the Fed, for example, perhaps in a way to get ahead of the curve of what could happen with Bitcoin. But we have to remember that fiat currency is directly related to political power. I mean, that's just a fact of life, right? And the US dollar has been, correct me on the timing, but at least since World War II, the dominant currency in the world through which most transactions occur. So it does create a lot of interesting issues. And I know that attracts some people and repels others. And, I'm kind of going to remain agnostic as to my political view, but it's curious. It's to me, it's very, very interesting as to how this is developing. So there was a question about, so that was the question Cindy raised. Aren't central banks also developing cryptocurrencies so as to control the money flow? I think they're developing digital currencies, not necessarily cryptocurrencies, Cindy, just like I was alluding to. Ways in which, because right now, what most people don't understand is that the creation of money doesn't really happen by the government. It actually happens by the banking system. It is the banking system that actually technically creates the dollars, right? And so in a financial crisis, like we experienced in 2008, or even 2020, where you have the Federal Reserve trying to influence the creation of dollars by banks through lending, when that doesn't happen, the money that's getting created, in a sense, isn't hitting the end user, it isn't hitting the consumer. And the only way you can do that is through a fiscal response, i.e., the government literally sending money directly to individuals. And we saw what happened in 2020. They did that, but everybody got, to my knowledge, physical checks, unless you had, file taxes, and then you get, but if they could beam money into everybody's accounts digitally, it alleviates, at least it reduces the time element, but it wouldn't take the banks out of the middle of it, correct?
It's an amazing point, Maggie, in terms of thinking about that concept, especially how we actually think back to that. It was literal checks getting cut if you filed taxes. It felt, again, very archaic in terms of how we had to do this. And if people were trying to figure out if they were getting a check, they had to log into an old legacy system and refresh 1,000 times and hope someone was there because everyone else in the world was trying to do it at the same time. It wasn't very functional. And central banks, the US and others, are doing this for the exact reason. They're trying to create what are called central bank digital currencies, CBDCs, for short, or an acronym. And they're trying to, I think they're recognizing the lack of efficiencies or the inefficiencies in their currency and trying to improve the speed and velocity in which they can transfer money. Now, the question, concern, or food for thought for all of us as people and individuals are, I personally believe there's a world where these things coexist, being a central bank digital currency and cryptocurrency, because they have a lot of uniquely different properties. Quick example, China, definitely a different regime than us in the US in many, many ways. They have launched a pilot phase of their central bank digital currency. They tested this out, giving money to their citizens a couple months back in 2021. They have plans to roll this out fully with the Olympics, actually, as kind of like a launch pad for this, central bank digital currency. My point of saying this is they have a lot more control over your money now when it's digital. And specifically in the case of China, they airdropped or helicopter sent out money to individuals, gave it out for free, but they put an expiration date on it. They said, spend it or lose it, which in theory is a way to stimulate the economy very quickly if you want the money to get into the hands of the end businesses or the end retail services. But then we come back to the philosophical equation of, should the government give me a checklist of what I can or can't do with my money? Like outside of the legal factors of don't do these illegal things, but like that's more of a rules of the society situation than the government controlling my money. I don't know. It's a principles question, right? In terms of they'll have the ultimate level of oversight. Not that they can't already look at your bank or maybe freeze assets or audit you or things of that nature, but it'll be to like the nth degree of how much control and at what speed they can freeze your funds. If they think you swiped your card at the wrong place that looked a little sketchy to them, all of a sudden your bank account's frozen or something of that nature, right? So there's a coexisting. Yeah, I think that's why there's appetite for these decentralized currencies or technologies, that there's not the same power in the hands of a government or someone, right?
Very interesting. And we could go on and on. We're running against time. We didn't get to talk very much about some of the other types of currencies. And I think you've already mentioned, they run the gamut from things that may have legitimate use cases to the beanie babies of those of you old enough to remember the beanie. Talk about speculation, you know? So we'll have to save that for another day. Last question, does Fidelity have Bitcoin holdings? I can answer that, Fidelity, and I'll answer for you, Ryan, on this, because we're not here to sell anything vis-a-vis Fidelity, but Fidelity has rolled out a vehicle through which accredited investors can invest directly in Bitcoin in a privately held trust. That's a case-by-case basis if a client is interested in that. And if you want more information or you're interested in that, we can talk to you about that. But perhaps the deeper question is, does Fidelity as an entity, as a company, store any of its value in Bitcoin like Tesla does, for example?
Yeah. No, I'll speak to this generally, Maggie, and I'm remiss if I don't mention it because I think it makes Fidelity very interesting. I don't know the balance sheet capital. I don't have access to that. If our CEO is allocating funds there, right? It's private. Nobody does unless you work in finance. But what I can tell you more so, maybe a great way to close and how we got into this business, is Abby Johnson, who's our CEO, is very much a forward thinker on all things cutting edge technologies. She actually had our research and development group start mining Bitcoin, that whole process we talked about, in 2014, 8 years ago.
Interesting.
So we've been doing that ground floor, getting our hands dirty since 2014, because we said, what better way to understand what Bitcoin is than participate in the network really at the foundational level. So that's how we got our start. And that's why, if you look around the companies in this space, Fidelity is, one of the older tenured ones, especially because we did explore it and really found that, I think why we're having this call, and I'll let you close, Maggie, is now it's certainly top of mind for investors, and we want to be a resource for education, as this continues to develop.
So that's fascinating. So we don't have any way of knowing just how many Bitcoin have been won over the years by the mining.
I couldn't even tell you, and I'm close.
Right, because remember, for folks, Fidelity is not publicly traded. So Fidelity is a private company. It's 51% employee owned, which I really love, and 49% still family owned, as I understand it. So that's interesting. I did not. Now, let me just ask you a logistics question and we'll go. The offering I alluded to, I'm assuming you guys are buying those Bitcoins in the open market. We're not, the investors aren't depending on you to like win those in a coding competition, right? I mean, that's just.
That might be more problematic. Yeah.
Yeah, indeed. Okay.
No, I know the good news about Bitcoin, I'd say generally speaking, even about how we would source Bitcoin or anyone for that matter, is the market is very mature nowadays in how you would buy that, Fidelity or otherwise. I'm speaking in terms of if you went and bought any on your own, spreads on buying that are very tight, very comparable to traditional markets in terms of how much liquidity there is to source these days. So it's not like a challenge in terms of accessing it on the open market, whether you're Fidelity or anyone else. There's a lot of liquidity available in this space.
It's the question of any given
day. It's been institutionalized a lot, right? At this point, there's a lot of larger players involved behind the scenes to help facilitate that type of stuff.
Excellent. Well, Ryan, this has been super informative. I'm very grateful for your appearance. We may bring you back again at some point later on down the road as things progress in one direction or another, to talk about other cryptos, etc. But I really appreciate this, and it was fun to get to banter with you. Thank you all for participating and for your very interesting questions. If you have other questions specific that didn't get answered or that you think of later, feel free to send them on to me, and I can always relay them on to Ryan if we can't get you the answer. We've got lots of resources for those of you who are just interested in learning. And I think it's one of those things where I don't think this whole technology is going away, and it behooves us to understand it. Whether we invest in it or not is another question, but we at least have to understand it. So again, thank you all. Have a great rest of your day, and I'll look forward to seeing you all or talking to you again. And thanks again, Ryan. Take care. Bye-bye.